Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, for starters, the GIFT Nifty suggesting is likely to be a start in the green. But there are plenty of stocks to discuss. And to help us out with some analysis on that, we have market expert Ajay Bodke, who joins us on the show. Hi, Ajay. Good morning. Thanks so much for joining in. Well, let's talk about the stock of yesterday first, Reliance Industries. We got a double positive that came in, first on the financial services unit as well as on the retail unit. And stripped of that, actually, the Nifty would end in the red yesterday. How do you see the stock, play out from here on? It's closer to around the 3,000 odd mark. It got a couple of triggers as well. Your view in the stock at these levels?
Good morning, Nigel, and thank you for having me on the show. I remain extremely constructive on Reliance. I think after a few quarters of underperformance, I believe that over the next 1 year, one needs to be overweight on Reliance. If you look at the carve-out of the Jio and the way the structuring has happened, I think today you're looking at an entity with roughly 1.5 lakh crores of net worth, 1.1 lakh crores of Reliance holding, as well as around 40,000 crores of net worth. It becomes, on the day one, the fifth largest in terms of the entire financial services space, and the largest NBFC in terms of the net worth and the capital available. The next one, which is Bajaj Finance, it sort of appears puny in terms of the total net worth that the Reliance Jio entity will have. And with Reliance's proven track record in terms of massive scale-up of operations, offering services to clients at great value proposition, as well as its intent of getting into adjacencies like insurance, asset management, wealth management, and a world-class team. We have seen it repeated in telecom and retail. So I think I would, from institutional investing perspective also, I think a large amount of money would, in my opinion, gravitate towards what are currently extremely high valued NBFCs towards Reliance. Let's not forget that entry of Grasim and JSW had led to a PE derating in terms of the current leaders in paint sector. And we saw the same with Adani's entry into cement in case of the leaders in cement sector. I wouldn't be too surprised if the same dynamics were to play out in case of NBFCs also. So I remain extremely constructive on Reliance.
Okay, extremely constructive on Reliance. Ajay, hi, good morning. Got that. Do you see further upsides in names like Tata Motors? I mean, despite the rally we've seen already, brokerages like Morgan Stanley have a 711 target price, which is an additional 15% upside from where the stock is currently at. Are you that bullish?
Yeah. Good morning, Sonia. I think on the autos, if I were to just dwell for half a minute, I think I expect that this quarter, the demand will continue to improve in PVs and two-wheelers. And when I've seen the sales volume of CVs, I think slightly soften. On the two-wheeler side, I think, I personally feel that after many quarters of underperformance, one is seeing the domestic volumes picking up quite strongly, but the competitive intensity of the high end also is increasing, and the exports remain weak. This will be a quarter, Sonia, in which the margin expansion will continue. And I think this will be the fifth quarter on trot that the margin expansion story will play out in case of auto sector due to superior product mix and high utilization levels, plus low raw material prices on a YOY basis, and lastly, easing of availability of semiconductors. Coming back to your question, I think this will be the first year in, I would say many years, 3 to 4 years, in which the first quarter for JLR in particular and Tata Motors as a whole will continue to remain positive. There will be strong generation of free cash flows for the quarter as well as for the full year. So I remain constructive on two companies in auto sector, Maruti Suzuki as well as Tata Motors. So these would be my preferred picks in auto sector.
Any thoughts on Titan? Yesterday, Ajay, Titan took a big leg down. There was a brokerage downgrade on Titan. They believed, given the high valuations, the stock rise that we've seen in the recent past, all the upsides are priced in, and Q2 and Q3 could be a lean period because you don't have that many festive dates, which could fuel merit season demand. Thoughts on Titan and, as it's currently placed right now?
I think I would be cautiously optimistic on Titan. the stock sort of, in my opinion, tactically, I think one could take some profits in Titan because, as you rightly said, I think the following 2 quarters, the overhang of slowdown in demand will continue to weigh on the counter. However, structurally, I think the story in terms of formalization of the jewelry sector continues to play out, and Titan sort of being the largest and the most reputed player in the sector, I would not be too negative on it from a structural perspective.
Okay.
But Rima, on the retailers in general, I think if I could just add a line out here, I think what is seen for the retail sector in general is that my channel checks are suggesting that the value for money retailers are struggling in the last quarter. I think if you just look at the footwear sector, I think I touched base with a few companies there, and you're seeing that the growth rates continue to remain very anemic, and the end of season sales in case of many retailers, fashion retailers as well as footwear companies, have already started quite in advance. And even a company like Page Industries, I think I'm expecting a 10% degrowth in sales for the first quarter on a YOY basis. And companies like Bata, Relaxo, anemic low single-digit growth, 3 to 4% on a YOY basis. Campus around 8%. Metro, I think, should do slightly better at around 12%. Trent, of course, will stand out. So I think retailers in general, one needs to be cautious as you go into the result season.
Cautious on retailers ahead of the earnings season. Ajay, I request you to stay on.
Welcome back. Well, the GIFT Nifty is suggesting a 60-point gap up. Remember, yesterday we ended in the green, but that was courtesy Reliance Industries. Today you'll require the other components of the Nifty to perform. Well, we have Ajay Bodke who's still with us. Ajay, I wanted to ask you about the Vedanta Group companies. Earlier they were talking about this semiconductor plan that they had. It was going to be done from the parent, that's Vedanta Resources. Now things have turned around. They've got these 2 entities, both into the listed entity. And the partner, the JV partner as well, as pulled out. How do you approach the stock, Vedanta Limited, at around 280 rupees? Now, going by the stock price movement, the street seems to be thinking that there is a backup plan, because otherwise the stock would have been under pressure yesterday. Your take?
I think, if I'm not wrong, the company has indicated that they are in talks with another technology partner, and very soon they will be putting an application along with that partner. And I believe so has Foxconn. Foxconn also has indicated that they might tie up with some other partner. I think this has come as a surprise for many investors because the capital requirements, I think, for this project are humongously large. And with the group already stressed in terms of their repayment abilities over the next few quarters, I think it will be very difficult, I think, for many investors to digest the fact that such a large project is coming into this entity, and that too quite abruptly. So I think I'd be worried about venturing into Vedanta at the current juncture. I would rather wait and some clarity emerge about the exact structuring for this massive project that they would have in mind, what kind of equity would they put in, and what kind of payback they're expecting for this project. Because these typically are very long gestation projects. And this is, from the group perspective, I would say, not the opportune time to commit such a large capital in this entity.
Okay. In fact, in the last 6 months, while the markets have zoomed quite a bit, Vedanta has lost about 10 to 11%. So I guess that caution is well taken and on board by the street as well. Just stay on, Ajay. We'll come to you in a bit. I'll get Ajay Bodke back on board to give us one last view before we let him go for the day. Ajay, this is kind of like an open check question, right? If someone wants to invest in the market, has missed out on the run up until now, what are the 3 or 4 large cap or maybe even non-index large cap names that you would still recommend?
Sonia, I think Reliance, HDFC Bank, where I'm expecting a 20% growth in profits for the first quarter on the back of 26% growth in the NII. These two certainly would form, and Bharti Airtel. Now, in case of Bharti, I think as one of your colleagues mentioned, I think the expectation is that the cloud market should triple to around $18 billion in 5 years' time from $6 billion. And the company has been, over last few quarters, boosting its cloud capabilities with a large number of growing partnerships. So I believe that I wouldn't be surprised if Bharati price could touch around, say, 1,100 rupees over a next 12-month perspective. So these three would be my large cap picks. On the mid cap picks, I think I continue to remain positive on the luggage sector because my channel checks are essentially suggesting that the demand remains strong. Also, the competition from the unbranded sector continues to remain weak. And one is seeing a healthy trend in terms of domestic and international air travel, demand for hotels and tourism. And that is actually, a direct indicator of a strong sort of, underlying demand in luggage sector. The marriage season also has turned out to be quite good. So I think Safari, I'm expecting that's my, I prefer Safari over VIP. Safari, I'm expecting around 18% sales growth in the current quarter. The margins will be around, say, 17% odd. And VIP will turn out slightly weaker in terms of top line growth, around 12%, but the margins will stand up at around 18.5%. So I think luggage sector, and lastly, I think PVC sector, pipe volume sector, I think, that's again where I'm very positive, Supreme and Astral, because I'm seeing PVC prices have declined. I think, and that is sort of, will play into the volume growth for the PVC sector. Plumbing pipes, agri pipes, demand remains strong. But on a quarter-on-quarter basis, the margins could come down simply because the companies have undertaken price cuts because the raw material prices also have come down. So these sort of are the areas that I would like to concentrate on.
Okay, all right. Ajay, thanks a lot for joining in and waiting by as well, discussing all those stocks. Wishing you a good day ahead, Ajay. Look forward to having a chat with you rather soon.